quick 10-minute video on yesterday's oil breakout trade, answering one of the questions from some of our Discord group to understand why the profit was taken at this point and not at these lows. Very simple. Once you watch this 10-minute strategy, you understand how we optimize this for maximum profit over a 30-day period. So a good learning point came yesterday with a question on why a profit was taken at a certain time on the trades. It wasn't just me, it was some of the traders that have got our automated strategy builder for the range breakout, in specific on oil. So I'm going to answer that today. So this is in the Discord group. So we made $1,606 profit in about 4 hours. It's a great trade. It wasn't pretty, but it was, it worked and it did what it's supposed to do. So the profit was taken, and this user was basically couldn't understand that the price of the closing position is higher than the earlier movement. Now, one of the things we don't have is a crystal ball, but what I want to do is go through a little bit of the optimization for this strategy, because what we're looking for with any trade are for the runners. Okay, we're not necessarily going to be looking for targets every single time, because some of these trades really do run, and the way we optimize these strategies is to allow that to happen and give the instrument, in this case oil, room to breathe and go in the position that we want it to go in. So this is the actual trade yesterday. So it was the oil range breakout. We went short, and you can see at this point, this is when the profit was taken. So the question was, why didn't we take it down here? So we're going to go through each particular element of this. But what we're looking for is when it starts to find support at this point and then goes up to test the resistance. We're obviously in a range at that point, but we don't know what's going to happen to the right. And we know through optimization, and it's a rolling 30-day optimization, we look at it every day just to see things are performing, that allowing this room to breathe while still making it risk-free is a great option to look for those runners, those $2,000, $3,000, $5,000 runners. So one of the things we have to do is allow the strategy to operate in the parameters that we've given it. So slightly closer look here, and what we're looking for really is the most important thing first is the exit mode. We've got it selected for confirmation. Okay, so there's two types of exit modes. We can go flat targets, give it targets, and we'll get out, and those targets are already preset. At 50 ticks it takes one contract off, 100 it takes another, 150 it takes another. Okay, now when we've got it set to confirmation, it still will revert to target if we don't get what we need for the setup, and I'll talk through that in a minute. We also have some stop loss update triggers, so when it moves through 60 ticks we adjust the stop to 2 so we're risk free, and then so on and so forth. Now when it comes to understanding if the confirmation strategy is going to be confirmed, is that these two EMAs here. So when we're going short, the green has to be below the blue. Okay, they're offset, and there's lots of settings for those. We can see here, we can see the confirmation fast is 5, confirmation slow period is 13, and the confirmation shift is 4. But I'm not going to go into all of that details right now, but the main thing is it will select the confirmation strategy to look for those runners, and we'll look at some examples in a minute. So we get the oil pit open, we get a red range, so only looking for the shorts. It breaks out to the downside, comes to test this. It wasn't support at that time because it needs to be tested at least 3 or 4 times. It only came really as support when we got down to these points here. So at that point we don't know it's strong support. As long as that green remains below the blue, the trade stays in. Remember, it's protected by those stop loss adjusts as well. In this case, it only went 60 ticks to get it to risk free. It didn't reach 100 or 90 ticks to adjust it to 45. So eventually we see we did get it crossover and the profit was taken. So now what I want to do is I'm going to go through, I'm just going to minimize my ugly mug. I'm going to go through, these are the trades. There's only been 20 trades in the last 30 days, and this is the sort of exposure that I'm looking for. So I'm going to look at a few trades. So I'm going to look at one trade that made 5,900. This was a runner, okay, and this is what we're looking for. They're not going to happen all the time, but we need to be in it to win it while remaining safe. The next one we're going to look at is the confirmation wasn't confirmed, so it reverted to target. So it took one contract off at 295, 595, and then nearly $1,200. So again, that worked. And then we're going to look at another target trade, and then we're going to look at finally another one of those confirmation type trades. So the first one, this is on the 3rd of Jan, we just saw the list of trades here. So this one was pretty basic really. We had the opening range for oil. The green was above the blue, so we had the confirmation confirmed. So we're only going to go long, and we're going to use the EMAs for our take profit, if you like. In this case, it got to the end of the session, made just under $6,000 profit, and one of those settings is exit on end of session, and that's what it did. It took the profit at the end of that session. Sometimes that momentum continues, and it did a little bit in this case, but a lot of the time we don't get a lot of volume around the Asian session. So that was one of the big trades. But remember, this is designed to look for those runners. The way I've optimized this particular strategy, so even even on these pullbacks, there's no panic there because the automated strategy builder understood that green was above the blue. Okay, that's a bit more complex behind the scenes, but that was the basics of it. So we didn't panic, and we ended up taking nearly $6,000 for those three contracts. So the next one is what we call a continuation trade. So that's the oil pit, the London Open here. We come up, then we move back down again. The bias is red, so we're looking for a short breakout. At this point, though, the green should. This is on the January the 8th, down the bottom there. The green for a short should be below the blue. It was not when we got the order in at this point. So even though we have we've got confirmation on the exit mode, it reverts to target mode because we don't have the criteria for confirmation. So what we get is the entry, then the first target is hit and one contract is taken off. The second at 60 ticks hits, is taken off, and then the third is there. Okay, now in reality, in hindsight, if we were a little bit more conservative with that particular, with those EMAs, that would have rolled all the way down into the oil pit open there. But again, we have to have strict rules. So all automated trading strategies are algorithms. They have to have rules. They're not artificial intelligence, and there's no such thing as artificial intelligence powered automated trading bots. Okay, we have to build the rules. We've got fantastic strategy. We just need to learn how to optimize, and those that have got this have gone through the optimization classes, and we support them all the time. So the next one is confirmation. Target. But this time, this is on the 18th of January, and we can see for a long the green should be above the blue, but it's not. So it reverts to target. For the entry, we get target 1 hit, target 2, target 3 does not get hit, but again with that selection we take off the remaining contract when the session closes. So this is another runner. So the confirmation for this one works really well. So I've actually zoomed in a little bit so you can see where the cursor is here. There's the opening range, the green is above the blue, so that it's reverted to confirmation. And then we can see here it comes up, hits the 60-minute resistance zone, comes back down. We get the cross here. Now this cross, remember that shift offset, we have that at 4, so it's almost like a leading So it's 4 candles in advance. So at that point, when that goes, there was no candles printed there. It was actually here, and that's where it took the profit at that point there. So remember, to answer that question, really, it's about when we optimize these strategies. One of the things is, what is your risk? What's your risk appetite? But what are you trying to gain out of this particular strategy? And in reality, you're looking to make profit whilst keeping the risk to a minimum. So if you can adjust those stops as the price moves through certain milestones, so you're protecting some profit, you're risk free after 60 ticks in this case, and then allowing them to run. You may only get those, that $6,000 trade every 60 days. But in reality, those runners that we've seen here, on average, around about $3,000 for 3 contracts. So they're not bad. And the target ones still make around $2,500 if the criteria is not right. So answering that question, although it's a bit of a convoluted way to do it, I just wanted to show you the reasoning why. Because on another day, it would have broken through support and ran and made $3,000, $4,000, $5,000, $6,000 instead of the $1,600. We can't look right. All we can do is optimize the strategy, keep re-optimizing, right times of the day, days of the week. This particular strategy does not trade every single day. So this is the performance report. I'm going to show the days it trades. So this strategy on the 3 contracts over the last 30 days has made $18,500 profit. Okay, the profit factor is massive at 7.08 because I'm very particular on the times it trades and the risk and everything like that. But one of the biggest things that makes that profit factor so large is because we allow the instrument to run. So again, net profit 18,500. Max drawdown could be quite high for some people, but this is 3 contracts of all, remember, and we've only had 3 losing trades out of 20. Okay, so for me, that's acceptable risk for that reward. So total number of trades 20 in the last 30 days, 85% profit rate, 17 winners, 3 losers. Average trade $923, average winning trade $1,200, average losing trade $900. All those figures are good. They look good. One of the big things for me when I'm continually optimizing is looking for those max consecutive losers. At the moment, there's only 1. If to get 2 consecutive losers, I stop. I re-optimize just to make sure there was no external reasons and the logic's still good, the strategy's still good. If it's not, I'll readjust. So what we had on this particular set was the London opening range. So that first 10-minute candle closes at 3:10 a.m. EST, and the oil pit opening range. That first candle closed. That 10-minute candle closes at 9:10. And at this time of recording, and this will change, maybe every couple of weeks or so. These were the days and the times of the day that were good for those opening range trades and those continuation trades that we saw examples of. So, Monday, Tuesday, Wednesday, Thursday, no Friday trading because the optimization has seen that the same criteria, there's more losers on that Friday. So we just don't trade on the Friday. And these are the particular times of the day that we trade on the Monday, Tuesday, Wednesday, and Thursday. So again, it's not just about seeing it hit a low a couple of times and then taking the profit. You've seen examples here where we had pullbacks and ended up making $6,000 profit. You have to give it room to breathe whilst reducing the risk because you will always get those runners. Now, we can't guarantee that's going to be every week, every month, but you did see some there and they do accumulate. You just need to give it a chance to run. So hopefully that helps. Again, this was the xBrat Range Breakout Automated Strategy Builder. I'm going to put down the links below for this, and it's only for NinjaTrader.